For another week. Today's date is the 6th of October 2022. Okay, ASX stocks, 2 tricks to win. I'm going to give you 2 tips today to help you trade. It's been a tough week again. We've had a bit of a rally this week. We're going to have a look and see what is happening on the market really. Okay, so first we go to our format for the week, which is just really going through the background, looking at the ASX 200, the Stockradar portfolio, some stocks for you, just a few today. And just a little word to you, trading should be simple. We don't want to overcomplicate things more than we need to. So just try and keep it simple, especially at the moment. Back to basics and everything will be okay. Okay, so firstly we should go to the Dow. It's had a rally the last couple of days. It really hasn't done too much. We've seen this sort of performance before. Nothing really substantiated yet. The trend is still down. The volume is still heavy. The momentum is weak. And we've got a lot of work to do before we reverse anything here. So don't get too excited just yet. And Nasdaq's pretty well the same. We've had a rally here. Compared to what we've seen in the falls there and the volume there, it really hasn't really put a dent in this downtrend yet. So, it's a difficult one. But unfortunately, the market's still looking fairly weak. Okay, now to commodities. Copper, probably a little bit better there. We've seen a little bit of support here. We saw a big rally last week. It's a good volume. But it's in this trading range here. The S1's at the low there. The trend is still down. It's trying to base out there, but it really has got a lot more work to do yet. And we're looking up here, a bit of an average here. We've got a little resistance here, downtrend line. This sort of area here is probably what we're looking at to see any change in direction in there. Gold as well, it broke down, it had a rally. This sort of thing always happens, but again, we're still below the average. Volume's nothing to talk about. Momentum is still weak. So the trend, we've got a new low here, so the trend remains down on gold, okay? So that's a negative as well. Crude, finding a bit of support at S1. The OPEC came out last night. They're going to cut some output, which is probably good for the oil price. Whether it's good for everybody is debatable, but for the moment we've had a little bit of a rally. But again, we've got some good support down here at S2, but it doesn't really change this downtrend that we've got for the moment, this corrective phase we're going through. And there was some pretty heavy selling these last few weeks when we broke down from this R1 level to the S2 level. So that's still not looking all that positive. A little bit of a rally, but nothing really significant at the moment. So now we go to the ASX 200. It again, it's put in a pretty good rally, in fact. Quite a sizable rally. Hasn't broken anything yet, but it's a good sign. A little double bottom here. May well get up and test this R1 again around here, but still that level is still going to be a bit of a wall of resistance, and we've still got some fairly negative resistance there. Okay, now if we just go and have a look at the stock we count at the moment. Stockradar portfolio is down 3 to 19. We lost 3 more stocks again this week. So everything's still looking pretty well the same despite the rally we're seeing at the moment. So 18 stocks at 162 really puts the equity to cash ratio at 14 to 86%, which really is not very much. Okay, so not a lot of stocks. Some of them that we do have are going up. We'll have a look at that in a minute. The conservative portfolio is down again. I've only got 2 stocks in there. So it's at 10% equities, 90% cash. Again, a fairly bearish view. And the energizer stocks, which are really piled towards the trending stocks, and there are some good trending stocks at the moment. Not many, but a few. So we've got 80% equities, 20% cash in the 5 and the 10. 4 out of 5 for the 5 stock, and 8 out of 10 for the 10 stock. Okay, so they're not looking that flash at the moment, but still those stocks that are there are going up. Just want to have a quick look at my open positions at the moment for you at the moment, just so you can see what I talk about all the time. My premise being, big wins, small wins, small losses, and big losses. We cut out the big losses, so we bias ourselves to the big wins. And if you look at our portfolio here of the 18 stocks, you can see here that there's a bit of mixed groupings around here at the percentage returns. You can see my entries and my entry price and things like that. But here's the real column we're looking at. Here's the profit and loss. We can see Computershare, Whitehaven, New Haven, and also we've got here probably PLS, which is starting to do a little bit there. It may do something, but these 3 stocks really are the main stocks, and that's what's going to happen in your profile when you use a process like mine. That you will have a lot of stocks that will come in and out, but it's the big ones which make the difference. If we look down here at our return, that brings our return to 11.1, and this is only over 86 days. Okay, so I'm not trading for a year. I'm trading shorter term, so I can generate more money. So that's actually got a 40% annualized return. So that's why the compound annual growth rates are quite strong. It's very hard to view sometimes, but that's a picture that I always look for. And you find that the trending stocks that congregate towards the longer periods here up the top, and it's a Computershare has been in since March 2021 is generating 76%. So that's just how the open positions work. So there should be 18 there, not 19. But you know, it's a difficult thing to look at, but it's really hard to get in. Every trade is not going to be a winner. Every trade is not going to be a big winner. But the important thing is when you get a big winner, you stick to it. So I'm going to talk a little bit about that a little bit later on. Okay, now, just to go on to some more stocks for you, there really is not an awful lot to talk about at the moment because there's not a lot of change in the market. But I'm just going to show you a couple of stocks that may be doing something and may be worth looking at. Okay, so Rare Group, trend intensity is still -8, so still fairly negative. This week may change because we've had quite a strong week this week. This is as at last week. However, it's still got a bit of work to do on a trend intensity basis, but if you look at the chart itself, we have a low here, we have a high point, we've come back to a higher low. That's my constructive thing. When I see a higher low, I mean the buyers have come back in and they've pushed it higher. Now, R1 is probably the key trigger point here, but I need to get trend intensity confirmation to confirm it. And at this stage, if you look at the volume there's not a lot of volume really doing much there as far as the buying side goes. And momentum, although is a lot better, is still below zero level, and the price is around the moving average. So we might just, if it broke through R1, we might just get a confirming trend intensity rating, but it's still got a bit of a way to go. It'll be better this week, but we'll have to wait and see what actually does happen. But there's constructive there, and it's certainly worth watching for the moment. Okay, the next one I want to have a look at is in the same group as that, is car sales. So car sales is a similar thing, but it also has come back to a very good strong support level down here. Now, this is a very good sign if it holds these sorts of levels. The last rally we saw off this level here was a very good level. We don't get caught in these ones because we always wait for the substantiation to occur when it comes back and creates a new higher low. But for the moment, if we just look at this break here, it broke above the average, the price was a good move, and we also saw some very, very good volume pushing this price up. So that's very constructive, okay? It's not our decision time yet, so we've got to wait for a bit more. So this has come back pretty suddenly, which is a bit of a jolt to when we see that rally on good volume. So the sellers have really worked this over. They haven't pushed it to a new low yet, so we still have a constructive point here. We've got a big support here. We've got a challenge to this low. If it does confirm that it can hold this area here, then the R1 level becomes a good trigger point for a rally from there. So that could say the correction is over, but it's not over yet because we have a lower high here that needs to be broken before we can get any confidence in this one yet. Okay, so car sales and rare probably worth watching, but there's a lot of work to be done yet. And again, trend intensity rating last week was still down at -9 because this came down on some very heavy volume. Momentum was just below zero again and below the average. So it's swinging around a little bit at the moment, but for this point in time, we just have to observe and just follow the process as we should, because it's a very difficult market. I mean, the rally this week has caught a lot of people off. Well, we saw some huge moves, but nothing really compared to what we've seen on the downside as yet. So perspective is what we need, and that's what trend intensity gives us. Okay, the other stock we can look at is Aristocrat, which is also, it's had a fairly big correction off around $47, $48. It's come back to just over 30. So that's a pretty good healthy correction, a bit of volume here as we can see. Now we're seeing a low point here which is holding. We're seeing a rally, we've come back and we seem to be holding this low point for the moment. The selling has been evident there. We've seen a good week last week on the volume sign, so that's a very good early sign and a rally, okay? We're still below the average and momentum is still a negative, so we've still got a very weak trend intensity rating of -8. So a lot of these stocks have got a lot of work to do yet. So, you don't want to get caught up and find you're buying something that really isn't validated and you're going to find it's going to come back again. So it's just really a matter of conserving your capital. I'm going to talk a bit more about that in a second. But so Aristocrat is probably worth watching, but it's got a long way to go yet before anything really happens there. Okay, Nanosonics is the one we look at each week. We're just following this through this corrective pattern. We now have it come back. It's came back very sharply. This is a volatile stock. It had a good rally on some good volume. It's had a pullback on some good volume. And now we've held at a high low again. So we're still in that constructive format of a high low. And if it does break through here, that's the signal we're looking for. The same picture as car sales and Rare Group, that same sort of pattern, but just slightly different in shape. Okay, so the projection there is still right. If we hold here, then we look to this here as a trigger point for a further rally, and we'll look for some further evidence of this. Now it'll be above the average if this happens. The momentum has also improved quite a bit. It's quite likely that could push through, and a bit of volume might help it. But that picture has got to build, so we've got to build that evidence further before we can really get carried away with this one. Okay, now the next one I want to show you, there's two more I've got for you here. One is mineral resources, which we have just entered this one here on a new high. It's had a really nice constructive pattern for quite a while here, which is a bullish pattern of where sellers sell at the same level and the buyers are increasing their levels, and eventually they push the sellers out and you get this market imbalance, so of more buyers and sellers, and the price must go up. So it's been a bit mixed on the volume side, but momentum is strong and it's above the average. So trend intensity rating is +8 and mineral resources. So this is one we've bought, and we just set our stop and we just wait for this to unfold, hopefully in the right way. So that's mineral resources. That's a good start on that one there. The next one I'd have a look at is one we looked at for quite a few times, but it's really important because these are the stocks that make the money. And this is up 75%, computer share. Now, I know we've got a top there. We've got three little tops here, which have resisted the price. So it's certainly something to watch, but as the trend is still up, we still hold with our position until we are told otherwise. And at the moment, we haven't. Our stop is still safe. The price is still above the moving average. We've got some high lows here. We can see that we had a couple of weeks here of some fairly heavy volume. Let me just blow this up a little bit. A couple of weeks here with some fairly heavy volume. The price came down a bit, but not much, but it's turned around and gone straight back up to the highs again with this rally this week. So this is my support bubble here, where if it starts to break down from there, we'd probably be a bit concerned, but for the moment it's not, and it could make a new high and go on again. So we don't want to give these stocks away unnecessarily until our rule, which is our stop loss goes, and that tells us to sell out. So for the moment, we hang on to computer share, and hopefully we wait for another breakthrough here. And this is a selling point here. So if these sellers here are broken, then they will turn to buyers, and you'll get this kick again. So computer share, certainly the case is not over yet. And why computer share has gone up and a lot of other stocks haven't, I don't know, but this is what happens in the stock market all the time. Certain stocks will do this sort of stuff, and if you just follow the trend and don't ask too many questions, then you'll be all right. The thing about this is now you've got to protect that profit that you've got, and that's what we will do. Okay, so they're the stocks I want to have a look at today. Not too much else on there. Yes, remembering the trend is your friend, and I'm struggling to find stocks to show you today, but because there's just not a lot on offer at the moment. The bounces really haven't been that good. Okay, so now I'm going to go to that. Now I'm going to go to trading tactics, and this is quite important. 2 tricks to win in the stock market. Now these are 2 things that are very obvious, but we need to do them to make sure we win. So first off, let's go. The first trick is learn how to control your losses. It's very, very, very important. And at the moment, we don't want to be taking too many losses. Okay, it's the easy bit, because all you just do is you just if you get an entry and a stop goes off, you just get out. Simple as that, at a predetermined risk level. Now, why do you do that? Well, I'm going to tell you why in a sec, because if you look at this graph over here, it tells you really what losses can do to your portfolio. So if we look at here, start balance of $1,000, we have a 5% loss. Our balance goes down to 950. To restore that, we need a 5.3% gain. Okay. Now again, the similar thing here: a 10% loss, we need 11.1% get back. On a 15% loss, we need 17.6 to get back. Now that's not too bad, but once we start getting down a bit lower, so if we say 25%, we then need our balance goes down to 750. We need to recoup 33.3% to get our balance back to 1,000. Okay. And the same sort of thing here, if you go right down to something like 50%, if you let your losses get up to 50%, then you need 100% to get back, okay, which is a really hard thing to do, okay? So, why do I keep my losses small? Because otherwise it's very hard to recoup them, and you don't want to be on the back foot all the time trying to get these things back, okay? It's really important. So that's why I limit my losses. I would rather get out and get back in when I get a signal rather than carry a loss and try and claw my way back. This table is something that's really, really important. So this is my first trick, which is learn how to control your losses. It is the easy bit if you have set a stop and you then just act on it. Okay, so that's the first clue. The second one is to protect. Now I'm talking about computer share, I'm talking about Whitehaven, I'm talking about New Hope. There's some great profits there, and I know that I won't let them escape, because that's what I do. I make sure my stop goes up and locks in those profits. Okay, so this is the fun bit, because I know when a stock moves like this, I'm going to protect it, because I'm not going to watch it go back to zero. And I know a lot of people have watched this. I'll hang on for another week, and you can't do that. So I use a trailing stop. What does it do? do, it locks in the profit so it can't escape from me. Okay, now Aristocrat, we looked at this a while ago. Let's look at the last trend we had up in 2020, 2021. We had a trend reversal up here. It broke above 25.91. Okay, so I set my initial stop at around 15%. Okay, and that's where that sets. Okay, that's my maximum loss I can take. To recoup that, it will take me 17.6% to get back on the next trade. Okay, and that's not too bad. So I can live with that. Okay, now, as the price does actually continue up, I will continue to move my trailing stop up here to lock in more and more profit. Now, a lot of these stocks will collapse before it makes a big trend, and that's the way the market works. But what I'm doing is I'm trying to capture the big trends, which are the ones that make me money. Okay, so this one here kept going up. Now I've given up some money here because I can't get a top and I can't get a bottom because that's my process. Okay, but when my stop goes off, and I've waited here for quite a few weeks, it eventually goes off at $43.70. I then just get out. I've locked in a really good profit and I move on. And that's what you do. That's the second trick to the market, is to lock in your profits, use your trailing stop, and it can be anything. Too tight, you get whipsawed. If it's too big, you're clawing back losses. So it's a matter of finding a balance and using things like moving averages and low points to help set your trailing stop within a risk band that you have. Okay, so that's really the second trick. Those two tricks, controlling your losses and protecting your profits, are really the key to making your trading successful. Okay, so trading can be simple if we let it be, and I'm going to talk a bit about next week, a bit about how I get into a trade and how I get out, because getting out of a trade is not less than the analysis. Once I'm in a trade, I don't keep analysing the stock. I keep analysing the stock every time it moves. It's really more of a budget or money management process, and I'll talk about that all next week. Okay, so I hope that gives you an idea. Back to basics, control your losses and protect your profits. And there are profits to be made even in this market, as there always are. Okay, so as you saw from my open positions, there's 3 big stocks there and a couple that are developing, and that was as of last week. So this week we've seen some good rallies further in some of those stocks like Whitehaven and New Hope and also Woodside, so that'll even be better this week. Okay, so that's really all I've got for you today. Now is a good time to take a step back and take stock of what you're doing. You know, don't start trading stuff because it's too difficult to make money at the moment. Look at what your trade plan is, refine it, bring it back to basics. Don't get caught up in this sort of moves. Wait till validation occurs as per your trade plan. So at this stage, apart from some specific stocks, we are seeing a bear market rally, nothing more at this stage. And you can see from the Dow, the ASX 200, all those sort of things, even the commodities, they're all just having a bit of a rally at the moment. And we need some more things to tell us the market's going to go up. So the key is for me to follow specific stocks, okay, because they will give me the clue. I may not have got Computershare, I may not have got the energy stocks if I've been in those top-down sort of processes. So my thing is to analyse the actual stocks themselves. Okay, so be careful out there, stay safe, watch your trends, heed your stops, and I'll see you all next week. Okay, hopefully for a better week. See you later.